Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Can I please get a screen and audio check in YouTube? Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Can I please get a screen and audio check in YouTube? Also, if you're listening to this, please let me know if you're hearing alerts going off in the background. There'll be like a ringing sound, not verbal alerts. Just trying to resolve a little something here. So good morning, welcome to the Traders Lab. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. Are you hearing a ringing noise? There it is. Okay. Nice. Well, we'll have to tend to that. Let me just see here. Oh, so it's not in YouTube. It's only coming through in Discord. Is that right? Just want to be sure. Maybe I can make an adjustment here. Anyway, the stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. It's based on structured trades that are available to everyone in the Bookmap Discord community, and there is no cost for this. That ringing, I'm going to try to do something about that, and we'll see how that works out. So let's get going. We got a lot to cover, of course. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And before I get into today, I want to remind you guys that there is a opportunity for you guys to get Bookmap. 3 months of Global Plus for free. Free is good. And all you have to do is do screenshots of your trades and just submit them on X, Instagram, or LinkedIn. And you can get a chance to win over $600 in subscription. I just want to let you know that because when I started with Bookmap and I purchased Bookmap in 2015, no contest, get your checkbook out. So this is a great way for you guys. And even if you don't have Bookmap, you're not a subscriber, you can still download a free digital version at bookmap.com and then play with it and do a few screenshots, annotate, send it in. In fact, you don't even register, you just post it. So, and if it gets selected, why not? I want to mention that to you, and it goes through the month of August, and this is 2025. So don't forget, don't miss out. My mother always said, free is good. So think about it. Take advantage of it. Anyway, let's take a look at yesterday, Friday, and Thursday. Thursday, we had what you might call the we'll see you later moment, and a huge outside day, and then we had Friday's gap. Lovely. So all wonderful. Now, let me explain what we're looking at here and why it's important and what it might mean and how the market works. Now, before this open, so Thursday, we just had this, and I suggest everybody who hasn't gotten around to it, review the stream from Friday, where we covered this, because before Friday's RTH open, all of this is laid out. Now, where's it going to go? That's part of the thrill. Now, what's important to know is down here was a swing. And what this had done is there were stops under here. Notice where I'm all the way back. I'm all the way back here in July, I believe. July, can't tell. Or beginning of August, I should say. We took out the stops under here, and then we started the move up. And it was on really light volume. The higher time frame was not participating. We discussed this in TraderLab. Now, here's a couple pieces about this. This is a profile, and it's a profile or a distribution of volume, and it shows all the volume in this period of time. So this was the swing high, and at the time, this was the swing low. So up we went. The dividing line between these two distributions, and this is like, oh, too high, too low, and this is the fair price or highest volume price in here. It's too low down there because there's no volume. That means you couldn't buy S&Ps, and this was where the high volume was, so that's like a retail price. Think shopping in your store. High volume, buyers and sellers do business, everybody's thrilled. And that was there. So when we rejected this and then we gapped under here, we are basically saying, forget about it. We'll catch you later, maybe the next time we're around or maybe never. And we gapped and down we went. Now in this area, this one, with that dividing line, the highest volume was 63.03 quarter. So let's think about what it says. This is the language of the market. What it says is up here, too high. I'm not paying that. I'll send you a postcard. On this day going down, this yellow line was the highest volume. Now I'm talking, you're hearing high volume here, high volume there. What's the difference? This is just for the day. That's called the naked volume point of control. That's what it's called. And this is for all of these days, the highest volume was there. So think of it as time frames. I don't think of time because this isn't regulated by time. It is regulated by the actual behavior of the participants. So just a little different, not a big deal. And here's our gap. Now let's talk again about what we know. Down here, this is the highest volume in this area. Here, 63.36 was the highest volume on this day. We gapped under it. So what does that tell us? Well, we might return here and check it. Is this really too high? Well, if it is, we can come back down here. Or we get above it, then where? Maybe back here or fill the gap. Maybe if we keep going, we come back to this. The market tends to check pricing. It's a shopping mechanism. So too low, too high. Now go down in fractal. Too high. Down here is the high volume. Too low from Friday. And then we'll see. And now everybody with me so far. This is before the market opens. By the way, if you're visiting in YouTube, how about a like? It's always nice to be liked. Now, let's look at the RTH Open. Now, I'm going to grab your context sheets if you're in TraderLab, because we're going to talk now about the condition of the market and how it sets up and how our trade plan would have gotten us positioned for longs only so far. And of course, like everything in trading, it changes. But what happened here? Now, let's talk about this. This is Friday. This yellow line, 62.64, is the retail price from Friday. Retail means most of the volume was done here. So the participants found maybe too low. Why? Sell stops under this swing. Get them out. No selling below. What is that? An inventory grab. But we don't know. Market could open, could do anything. Now, this is where the highest volume was. Now, the next piece is this little yellow box is called a value area. And the value area is where 70%-ish of the volume took place in Friday's RTH. So think of it like retail and it's too high. This is too low. We like this price. And the market rotates. So it kind of finds its area. And then the participants go, that's a little too high. And then we go, nah, it's a little too low. and we find this retail. So at the end of the day, Friday, this was the fair price. Now, what happens? Well, we move up only in the ETH. By the way, you guys hearing that ringing again in YouTube? So we open out of value. In range, out of value. What does it mean? Now we're back at our context sheet. It means the market's out of balance. So what do we anticipate? If we break out of Friday's range, then the market can move directionally. And that means if you get here, north, and potentially back to the dividing line between these two distributions. But there's another piece. Where is our key retail price for this whole area? Well, if this is too low and I open outside of value, so the market's out of balance, where was my high volume price? It's there, 63.03. Now, 63.03. There it is. Now what? The overnight volume point of control. I'm taking you down in fractals or these ideas. The overnight volume point of control. What is a point of control? Highest volume. What's the last auction? The ETH. What does it tell me? Prices are being accepted now in the ETH, which has been moving up. The ETH high is here, and the retail price in the next higher distribution was at 04, 03, whatever. I'm here. RTH open. So what does that tell me? Get long. And now the next thrill, of course, is where? Let's look. Now I'm going to take you into structured trades in the TraderLab. Now, anything you see in any stream from anybody, you have to vet for yourself. TraderLab, as you guys know, is a community of like-minded traders who've come together to leverage their experience. And of course, it's about you building a trade plan that resonates and works for you psychologically. There's no plug and play. There's no holy grail, no secret sauce. Doesn't exist. There isn't this only one thing you need and how, that is nonsense. And if you've been here in this business or attempting to be in the business by now, you keep waking up in the same place. If you've been looking for those answers, the answers don't lie outside. They lie within you. They really do. But you need to understand market mechanics. And that's a way that you might want to figure out, well, how does this thing work? Let's look how it works. What does the market do? This yellow line represents what I consider, and it's called developing volume point of control. What's the difference between the ETH volume point of control and a microcomposite volume point of control? These are fixed. They're not moving at this time. ETH auction, overnight volume point of control, fixed. That auction's over. Now we're in the RTH open. We're opening at a fair price, but we've rejected what's below us. Now this yellow line is developing. So this is going to move around because this is real time. In other words, developing time frame. Hope that makes sense. So let's look. RTH open, we get a little selling, a little jiggle in the wiggle, and this is called the variable high volume node. Now this happens very quickly, and for me, I cannot react this fast. So I'm a little bit more of the patient. Be patient. There's loads of trades during the day. Doesn't matter. What matters is no FOMO, being in control over time that supersedes one trade. One trade, fine. But you don't build sustainability on gambling in this business. You build sustainability on discipline, patience, knowing what you'll do before it happens. Now this right here is too low. No way to know. We're in here 15 seconds. Me, I cannot do anything in 15 seconds. So too high, too low. Now this is called VPOC migration. This is the last place developing traders should trade. But if you already learn the other structured trades I've shared and you are profitable and consistent, then this is like the last place to go. But you need to understand market mechanics and something called mean reversion, understand what's going on here. So that's why I was suggesting TraderLab, you kind of start. Now this is VPOC migration. Now, but here's what's important. What is the most important piece in this? The location, the rejection of what's below, and knowing that this is the current retail price from the ETH, and I'm opening at this level. And if I move away from it, it is saying, now this price is too low. That one. This is the first long VPOC migration. Now, your teeth will chatter when you do this because it could just as well do this and come back here. And of course, if that happens, we all take stops, and that's part of the thrill. It is just what it is. So let's watch VPOC migration. I'm going to label this. Now, what I'm doing is I'm tracking pricing. Pricing is, and the reason I use a volume profile is a volume profile is really just a supermarket for S&Ps. That's all it is. But it's showing me the valuation based on volume. And you know yourself, you go to the store and there's a price and you like that price. But what happens when you go back to the store and you can't buy it at this price anymore? Because this is the retail price. So it's too low there. This is the new fair price. It's too high there. And then off we go. Now we have a new price. Well, if it doesn't come back there, or you want to buy an S&P, you're buying it there. Does that make sense? I will get that alarm turned off if you guys are still hearing it. Are you guys still hearing that ringing? Maybe it's just me. You are? Okay. I'll get to that. So, long in the TraderLab, long in the TraderLab. Right here, when it breaks high is a long. So you have break high, test, long. Look at the symmetry. Support. Shift up. Break high. Cross over. Test. This is support. Break high. Long. Too low. Too low. You bought it here, you get taken out. You bought it here, you get taken out. You come back to mid. This now sets up something called mean reversion, which would be a long from here to here and then up. And you are going for yesterday's high and the ETH high, by the way. Now, let me see where that level is I was talking to you guys about. Okay. Absorption. This is resistance because we have a sweep, we have resting liquidity, we get a retracement. If we look at this, this is now resistance. I'm going to draw a little box around it, by the way. And it's a location. Whoop. 15. It's this right here. So on the way up, this is an outside edge. It's right there. So this is an area of potential resistance. Now, we did get into yesterday's high. That's a probable target. And then we're looking up at 36 is going to be our next area. And then this is, and maybe the gap fill, but this is sort of where we're trying to go. Okay. So that's all on the price map. So this right now is that 15, that's resistance. VPOC migration. You notice something familiar. I got to mark this. Now, the thing with this is, under certain conditions, we're going to have a lot of trades, and under different, like rotational conditions. But when we have, hold on a second, a moving market like this, let me just see if I got this. I just want to move these around in case we come back to them. Maybe. So there were a number of entries on the longs. And, for me, and this is not, for anybody else, I cannot consider a short under any conditions here. Unless, and for traders in TraderLab, the advancing side is the long side. And until we get up to that low volume area, at least for me, there's no reason to be short. Now, it doesn't mean you can't take shorts, but if you're not a profitable trader on the long side, then you really have no business taking shorts. In my opinion, it's just an opinion, but it's worth something, I think. So let's label these. So what does it mean, though? What do we see? What we see is the market is accepting higher prices at the moment. And what else do we know? We have 36, a naked volume point of control. What is it's the same as this, except a lower quote time frame. The same as that, but a lower time frame. I should say same time frame as this, except this is the last time up here where it was a fair price and we gapped under it. So the nature of the market is to come back and check it. And if it's now too high for some reason, that could be the end of it. But what is the condition of the market? We're in a gap. The statistics don't know anything about this. They just know, and here's the gap high, and here's that dividing line that I told you about at 55. So we are trying to go here, fill the gap. So 36, target, and then up here. And that's not a trade recommendation. Of course, it can do anything. Who knows, right? And fill the gap. And here's another thing to think about. If you watch Friday's webinar, I talked about low volume zones. And you can have a low volume zone in any fractal or time frame. What happened here? It's not auctioned. What does the market tend to do? And of course, it doesn't have to do anything. It's going to come back, fill this in, and check it. In other words, we didn't check this on Friday. We went, we're out of here. I'll send you a postcard. And then it's like, what do we think about in here? Well, if that's too low, and we know this is a dividing line, and we know that up here, which was the same as that is the same as that at a different location. If we don't come back here, and I'm not saying we won't, it's not my job, we might come back here, and if we can't get any traction up here, it's hasta la vista, and then we'll rotate back here. If we come up here, we can test this or just fill the gap, fiddle around, and then consolidate in here. That's possible. Or we come all the way back here. And it's not my job, I don't predict anything. This is a business of alignment. I hope that makes sense. So let's come back to the yellow brick road here. I wonder what was making all that racket. I think it's this. So let's see where we are. Excuse the book. Nothing here yet. All I have here is those longs. I don't have anything else. Now, this is interesting. Let me explain this one to you. In the TraderLab, I spent a lot of time talking about what I consider to be the trade that traders need to learn and be able to execute. But when I mean learn, it isn't just click the mouse. That's the easiest part of this thing. Well, not really because of our fear, but let's just say it's not about clicking the mouse. It's about really understanding how the market works, why it does what it does, and how to get in alignment with it at times with an edge. And the rest of the time, your job is not to interact. Your job is to wait. It's like a bus. Where's your bus? Let's talk about the bus. Right now, the fair price is below us. So we're just on our way up, and this was a target coming up. So if you're long, you would be scaling here. Why? It was a fair price that we left behind. The market has that tendency to come back and go, oh, is this still too high? Well, if it is, we can then rotate off it and go south of the border. Or not. That part, don't know. Notice where the behavior takes place, and there is no precision. But, horseshoes and hand grenades. This is pretty close, right? So we have sweep, resting liquidity. When we see resting liquidity, and it can happen anywhere, we don't know, and you get a sweep, it's possible to get a counter rotation. Now, here, I know this is a retail price. Also, I know at 9:30 Central Time, my time, that there's over a 90% probability I can take out either the first hour's high or low. All things considered, I don't know about you, I'm going north. Anybody want to go south? That's your business, as they say. But to me, not so much. Because to me, I am going, who's getting squeezed? It's the shorts. Do you want to join the retreating army? Or do you want to use counter rotations for alignment with the advancing army? Not a complex concept. And yes, at some point, the market will reverse. And as Dirty Harry always said, do you feel lucky? Well, do you? Well, try to pick a top. Now, you could trade counter rotations, but if you can't trade with the trend, you're on your way out. So we don't want that. You don't want that. You got to start and deal with your emotional states and staying in alignment, in my opinion. Again, it's just an opinion, not saying it's right for you. So let's look at this. Now, this, I didn't discuss this in TraderLab, so it's not a big deal. But what's going on here? Sellers are here. Buyers are there. Okay, brilliant, right? Right here, what do we have here? The sellers are there. Sellers are there, right here. Let me show this to you. Now, I'm getting a bit advanced. I'm just going to show you some structure. I mean, who knows, right? Look at this. I got my sellers there. Icebergs, absorption. I go down. Oh, maybe it's a short. Well, it can't be if this shifts up in this context. So it could be a long or nothing. It's just, at least now these sellers got run over. So who's selling? Is it profit taking or what is it? Who are the sellers? Do you want to join the retreating side? It's always a question I ask. Buyers are above here. Chop, chop. High volume structure here. Sellers are here. They get absorbed. We overtake the sellers. And you'll note, now here's a sweep. So this is important. Here is liquidity. Liquidity presses from this side. That sets up your counter rotation. Where were our buyers? They're here. How do we know the buyers are here? Because the sellers who are there got run over. I'm going to put a little box around this thing just so we don't forget. And there's liquidity here too. So let's just see what happens over here. Now, this is a bit more advanced. What this is the sellers were there. We break high. I get a sweep. That suggests the counter rotation. The liquidity comes in the book over here. Order flow can help you with this. The sellers are here. That's absorption. Why doesn't the market go down? Well, because these icebergs are passive and they are buying. Now, you don't know. Part of the thrill is we don't know until because we know buyers are here and the sellers got run over right there. So if I come back, what might these sellers do? Maybe. Just think of it this way. If you're short, and let's just say you're an iceberg, I don't know, and we come back, might you cover? Try to get out even? Maybe. And now if I get a trigger this way, I could buy this. And don't forget 9:30. Whenever we get there, I have something called the IB. Now, by the way, I forgot. This wasn't taken yet. So this is your target. Remember, 36. VPOC migration. Now I'm going to label this one. I'm just doing a very simple process, guys. What's complicated about this? You know what's complicated about this? Randomness. That's real complex because our brain does not work well in uncertainty at all. So that's when someone says trading is very complicated, I don't see it complicated. I just see it random. And those are different issues, right? If it's random, then we can't get certainty. So we got to figure out something else, right? So what do we know here? This is too low. What happens when I come out here? Well, absorption. Now, I don't know where the outside edge is. It's not my skill. So, all fine. Now, this is VPOC migration. What's the language of the market? This is retail. Well, what about below? Too low. So now we start doing this. Now, the thing about this, once you find a fair price, which currently is this, the yellow line, highest volume for the day is there. Then if I pause, I can start rotating around it. And that sets up a condition called mean reversion. It's the only way I have found, or the best way I should say, that I suggest for developing traders is to use outside-in rotational trading. It's called mean reversion. So you would be waiting and you'd be looking for outside in. Now, here we had our buyers, right? Here, there's the absorption. So out here, and this is very tricky because mean reversion is mean because where's the outside edge? Often what it's going to do is it's going to take stops. So with the market, once it gets rotational, where are the stops for retail traders? There, because retail traders, that's us, are risk adverse. Okay, so what do? They all do the same thing. They put their stops in the same place. If I'm looking to get long, I am not going to get long and put my stop here and here. I want to see the market come out and take the stops out. And then I want to see if it's just what I call an inventory grab or stop pick. And then the icebergs who are passive, these are limit orders, if they're taking the aggressors. Sell stops are aggressors. They're crossing over. Stop is a market order. Well, there's the passive side. They're buying. Okay. So if I know the stops are here, I am not going to get here and put my stop here. I want my stop to be away, and I want these guys to get taken out. Let's see. The stops now are coming out from here and here. 355 stops now. Buying icebergs. Where was my buyers? Here. Because that's absorption. Now, here's the thrill for all of us. Where's the outside edge? So let's look at the microstructure. I'm going to show you just a couple ideas. And this has to be vetted. And this might not be your thing. You know, I understand. I'm not saying it should be. And just because I can show you structure doesn't mean I can trade it either. Because I anticipate where it might go. I don't know where it's going to go. How would I know this? Because here I had sellers and the buyer, and here I had my sellers again, right here, same sellers. See them? And now what happens here? Buyers take the other side of the sell stops, and they break high. Once it breaks high, then I can lean on this for a long back to here. I can lean on this for a long back to there. Or I can do nothing and just sit here and work on my crochet because I don't have a vetted trade here. And that's okay. Doesn't matter. This, very interesting. And we've been talking about this. The high of the day had a sweep. The current high, I think it's here. And I was looking at this and I'm thinking, well, this could be problematic because I have liquidity. Let's draw a little box around this thing. And I was thinking about this going, well, this could be the high of the day, but, and here comes the but, well, first of all, if this is too low and I come outside and my retail price is here, what is this called? Same as this, outside in, mean reversion. Who knows? Sweep. What does it set up? Counter rotation. To where? Back to where the buyers were. Notice the liquidity, notice the liquidity, notice the location. This is like real estate. Let's look at the profile. Outside, in. This is like, oh, it's on sale. Retail. I'm not paying that. Rotation, you see. So this is what the market does. It's directional, and then it goes, I need a break. Oh, rotation. Well, once it goes rotational, in an uptrend, what do? Well, if you want to be aligned with the trend, which I suspect might have a better probability than trying to pick pops, but that's up to you. Me, not so much. I just want to get long for continuation trades. That's it. Where am I getting long? Well, here. But if not, there, 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 there. And where am I trying to go? You're asking? I know. Here. Not a recommendation. So if you weren't able to get on any of these other longs because you haven't vetted it, and that's okay, these are all what's called mean reversion. This is the primary behavior. Now, at 9:30 Central Time, and if you've been following the stream, I always share statistics, and no matter what, you always have to vet it. Anything you hear. At 9:30 Central Time, we have what's called the IB stat. The IB has about a 98% probability, either the first hour's high or low, or getting taken out. I don't know about you. I'm leaning towards this one. What about you? Well, if I have a 98% probability and I'm coming up to 9:30, do you think it might be prudent to try to get long for the statistic? Anyway, I break the IB. So I got my statistic. Now what? Counter rotation. Now, if I get long, this is resistance right here. And then higher. And, there it is. Resistance. There's the sweep. Now, right here, you could be done. You could be back in your Barca Lounger, or you're just trading the rotations. Structured trades. So long, rotation, long, to there, long, to there, and you're still trying to go higher, right? Long, to there. How many of these do you need? I'm just asking. I don't know. This comes into the book. Now, this was interesting. I was looking at this, and I'm going, well, this is nice. We got to clear this. This is a sweep, and the sweep suggests a counter rotation. Now, the fact there's a sweep there doesn't mean it will, because we had a sweep here. We got a sweep here. What does that mean? Well, this is the one that matters to me. Buyers are here. So if I come back and these buyers think this is a heck of a deal, this is like you go into the store. Maybe they got some of that stuff that was priced at the lower price in the back. You ever look in the back, like behind the new priced ones, and find one that has the old price? Probably not, but you might find one. And if it's mispriced, the market's going to come back to the retail price. But this is where it was too high. Where does the market come back? Where it was too high. And what is that? Isn't that resistance? I'm just asking. So if I understand, it's a little hard to do when they're this thin. I think this is about something like this. Resistance, support, resistance, you see? Now this comes in. Now right here, this can be a problem, okay? So you're seeing resistance and you got support. So if you think the trend is up, what are you going to do? Are you going to sell this? Or are you going to use it to exit? Or are you going to buy it here? Or are you just going to buy it, use this to get risk neutral? You got loads of range here, and then your stop stays under here, and you get back in the Barca Lounger. You see? This is not complicated. This is really the TraderLab, and it might not be exciting, but I don't think we're here for excitement. Though there are traders who are very driven by the dopamine and the cortisol and the fight and flight and the FOMO. But and those traders typically are not sustainable. They have a lot of fun, but they typically don't stay. It doesn't mean that you can't trade both sides. I do. But I will say that developing traders have to develop discipline and an understanding of market mechanics. So, and I always suggest in TraderLab that you build a plan out in a sequential process. So you bring the plan here. You don't make it up. You don't go, oh, I better get short. Or how about this? You didn't have any long trades until up here. Now you're thinking, I got to sell it. I got to sell it. If that happens to you, that is a psychological issue. It has nothing to do with the condition of the market. It has to do with you missing the longs that you didn't have a plan for. So therefore, you didn't miss them, you see. Does that make sense? And by the way, how you guys doing? How are we doing in YouTube? How about giving a like if you find this interesting? This is the TraderLab. This is the business of trading. I like to tell you, it's not fancy. You don't need fancy. I think what you want is sustainability. And there's no holy grail, and trading is random. It's not complicated. You can really define all of this. The hardest part of trading, from what I've seen over the years I've been doing this, and the traders I've worked with over the years, is discipline. And I think we don't give it what it really deserves. Someone can say, oh, you got to be disciplined. They go, oh, yeah. But if you don't really understand what the issue really is and where it comes from, then you're always going to be waking up in the same place with the same problem. It's not about what you intend to do. It's understanding why you do the things you do. Because you can't solve an issue unless you really understand it. And it's not a willpower thing at all. The mechanisms that work in your brain supersede your consciousness. So if you're just going to be, I'm going to be tough this time, and I'm going to put a sticky note up on my monitor not to bail out of the trade, I can assure you that won't be any part of your consciousness as you are responding to stimulus. It's really more it's wiring. Okay. So if you want to learn about those elements, you should come to TraderLab. There is a link in the bottom of YouTube there. There's no cost to be part of the TraderLab community. By the way, TraderLab community, I don't have an accurate number, but I suspect there's roughly 27,000 participants in the Bookmap Discord server. And many of them are taking advantage of TraderLab. I can't give you an exact number because it's a bit murky, but besides TraderLab, there's a lot of additional education: stocks, options, crypto, order flow, of course, with a high tier tool like Bookmap, algorithmic behavior, market maker behavior, swing trading, everything. And but the idea of Bookmap server is to help traders sustain themselves, and it doesn't mean you will, because this is work, and the work part of this is not the fun part of it. The work part of it is finding out where you have an edge and it's like waiting for a bus. Where's my edge? Well, other than that, I have nothing to do but wait. My edge is here, 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 here. Would you guys be okay with that? Also, my edge was VPOC migration. It's a structured trade. There's a couple longs off of there. So that's it, and that makes your day. And after that, you could be done. You're not here to be playing a video game. And if you're compelled, and I'm using a very specific word, compelled, then compulsion is like addiction. And a lot of us are addicted to adrenaline and dopamine, whether you know it or not. And you really need to spend most of your time with your psychology. Not with the next setup. Believe it or not. I believe anyone who comes to TraderLab can learn how to trade. If you cannot manage yourself psychologically and understand what drives you to do things that are not in your best interest, you'll not be able to sustain yourself. So that's something you might want to think about. And we all have the same issues, by the way. So if you're kind of going, well, how do you do this? Well, same way the rest of us have had to do it. We have to learn about ourselves. And we have to do a deep dive on what are the things that have helped us as a species survive, and why are they actually the problem in this environment? Fight and flight, avoid the saber-toothed tiger, the predator, and we're wired to avoid risk. Works great, except here, because we're doing the opposite. We're seeking risk to get reward. Well, what do you do if you're not wired to do that? And if you think it's, quote, easy, it can't be easy, because it is supersedes your consciousness. So we have to use other tools to be able to have a better opportunity to manage it. And we won't manage it all the time. We'll manage it with practice most of the time. And it's about mental preparation and statistical probabilities. When you don't have a trade plan, all you have is emotional triggers. FOMO. Oh, I'm going to miss it. I got to get in here. In the counter rotation. Oh my God, I got to get out. It's going to stop me. Is that you? That's all of us at some point in our development. And then you learn why. Once you understand why, then you can start building solutions. And it doesn't mean you'll be successful, because this, in my opinion, is the biggest obstacle to all of us having a business. And this is a business. So if you want to be in business, you got to approach it like a business. Hope it makes some sense. You guys have questions, by the way? How are we doing in YouTube? Please give a like if you're visiting. By the way, if you didn't watch Friday's stream, I suggest you take a look at that, because it sets up everything. Everything is sequential. These streams that I do, the market's a variable. The process of trading is anchored. That means it's always the same. Every time you watch the stream, you're going to see me doing the same thing. Because in the primer webinar I did, which has about 34,000 views, and it's available to all of you in the Bookmap TraderLab, talks about anchored inputs. And most of us use variable inputs. Imagine if really what we're in the gaming business, okay? By the way, let's keep an eye on this, right? We're in the gaming business. Now, in the casinos, they play the games exactly the same way, right? In the trading business, most retail traders are using multiple variable inputs. How can you have an edge with a variable input? That's like playing blackjack in the casino, and sometimes it's 5 cards or 7 cards, and let's throw 20 out there, Well, how do you have an edge? You can't have an edge with that. So most retail traders think more indicators creates not edge, but certainty. If I have more, I'll know more, I'll get more. But suppose more is the problem and not the solution. That's why our wiring seeks words like confirmation. You use the vocabulary confirmation. I want confirmation. I want to be more certain. Those words are a reflection of your risk aversion. Now, it doesn't mean we want to run into the burning building. Of course, what it means is you are already mentally in a place that is not in alignment with this business. You're looking for something that doesn't exist here. And I think it's really important to listen to your self-talk. Your self-talk is telling you about your beliefs. Your beliefs are generated from primal wiring, and it's true in the outside world. But what happens when you're in a gaming environment? You're not out there anymore. You're here. And when you're here, it's like suspended animation. It's like you're not out there, you're here. Yet you're bringing out there here and trying to bend this environment to fit your comfort, which is the outside world where we function every day by rules, right? Don't step in front of the bus. Okay, I'm not doing that. Don't drive through the red light. Order, predictability. Here, no order, randomness. So we have general ideas of what might happen, but every rotation, every buy and sell is random. I mean, is this the high of the day? Can you answer the question? Hindsight, of course. Right now, I don't know. So what do I know? I know this is resistance. I know this is support. I know if I break here, I can come here and maybe it's all over. I also know until it does, it hasn't. I know that emotionally, I'm going to be going from depression to euphoria to depression to euphoria. And when I get depressed, I get fearful. And when I'm fearful, I hit the eject button, even if the trade hasn't failed. Or I think it's running away. I got to get long. And I buy it here. I can't stand it anymore. Is that you? That's all of us. Except successful trading, you have to understand these impulses, where they come from, and how to manage them. That's what TraderLab is about, helping you understand the business you're trying to be in, and that we're not in Kansas anymore, if you know what I mean. Does that make sense? So let's see what this thing does, right? As I like to say, follow the yellow brick road. Follow the yellow brick road. Too low, too high. Support. Are we going up? Where's our target? Here. If we don't get there, we never have to. South of the border. Or we rotate down, take longs out, and then go up. Or rotate down, take longs out, and get new shorts. What's it going to be? Anybody know? Do you know? How about this? Do you know you don't know? If you know you don't know, now you're in an environment of 100% randomness 100% of the time. A tweet can come out, somebody trips over the cord, CME, anything can happen. That's the way it is in trading. It's random. If you're in an environment that's 100% random, then you're not going to solve them for certainty. You have to solve for randomness. So that's where statistical probabilities come in. If you have a trade plan that you've vetted and you're in TraderLab, you'll know where these trades might show up. You then know that if you put a trade on, that you have X probability of getting risk neutral before taking a stop, and we all take stops. So we have to get over it. Oh, you don't like taking stops? Who likes paying bills? I don't. But if you're going to be in business, how can there be a business that doesn't have overhead and cost of production? Can't. So what is a stop? How do you experience it? Personal failure or overhead and cost of production? It is a mental thing. We have to rearrange how we experience what's actually happening in this environment. So we have to no confirmation, no certainty. Yes, you will pay bills. What is a bill in this business? Other than sending your broker's kids to camp, with your commissions, it's losses. If I own a business and I have to pay a bill, is it a loss or is it cost of production and overhead? Reframe it. If you follow your plan, which is the number one thing most retail traders don't have, they're playing a video game, they're gamblers, that is not sustainable. The failure rate is, I am told, over 90% for retail traders. What are they doing? And then what are you doing? If you're doing what they're doing, don't expect a different outcome. At least, and maybe you'll be the exception. We all think we're special. But in this business, we're not special. We're all the same. It's what we do that's different that matters. And you need to know what you need to do. And I don't think you're going to get that. I mean, intellectually, I think we can figure this out. But emotionally, we can't deal with it. And we can't do what's in our own best interest. That's why gamblers don't stay in the business. And there's nothing new, by the way. Everybody thinks there's something new. Everything I see when I go out in the inner world and I see the quote influencers and all these, whatever. There's nothing new. Everything works randomly. So what you need to do is minimize your inputs so they're consistent, in my opinion. Of course, you have to vet this and then generate statistics. That's the work. Nobody likes to work. We all want to play. I know, video game. But the work is knowing that under certain conditions, you have what's called an edge or a positive expectancy of one thing happening over the other. It's no different than how the casinos play blackjack. They have an edge. Doesn't mean they're not going to pay the gamblers, and who knows. But they play the game exactly the same way because they know over time they extract dollars from the gamblers. we want to do the same thing. We want to, quote, identify a specific game and call it mean reversion in our business, which is outside in rotational trading. We want to get an alignment when that trade shows up, and we're going to use something called a tangible statistic to manage the lunatic under the hood, our fear, because we're always going to be fearful because it's uncertain. How can you not be fearful in an uncertain environment? Or let's use another term, apprehensive. Isn't apprehensive fear? You see what I mean? I'm apprehensive. So what do? I want confirmation. What is that? That's the lunatic. I don't want to get bitten by the saber-toothed tiger. I'm going to wait until I'm sure. Meanwhile, the trade's up here. Now you buy it up here. What is that now? FOMO. Where was the opportunity? Where the risk was the lowest, where we had most of the uncertainty. You see? But if you have the uncertainty with probabilities, you can then activate here instead of there. Do you think that changes things for you? If you knew not what will happen, but what your edge is, so you would have courage to just put the trade on and look at it as a sample. I'm taking a sample size of a random event that may or may not, this individual time, reward me. If I don't get paid, it's just part of the random distribution of outcomes. But the only way I get paid is by putting the trade on, taking the risk. Now, where do I want to take the risk? Do I want to take it here at the trigger, or do I want to take it here where I'm sure? And when I'm sure, do I have a better probability of getting paid and not getting stopped out than I do here? Is it less random there than it is here? What have I accomplished by seeking confirmation and certainty? I've taken my risk and I've changed it from, let's just say, a 2-point or 3-point risk to a 6-7-point risk. Which one of those would you rather be taking? Question. See, our nature to avoid risk actually increases our risk. It does not take away the random outcome, you see. So if we have randomness with certainty or with uncertainty, which randomness do you want? Less risk, more risk. You see what I'm saying? Does that make some sense? How are we doing? Is this making some sense, guys? This is the TraderLab. This is a process you can learn. It's based on market mechanics. How does the market work? Why does it do what it does? You know, how can you get in alignment? I've shared 60 PDFs of structured trades, as well as in the TraderLab community. There's a library of webinars on this process. And these are, trades I've taken. And I'm not a vendor. There's no cost for this. This is not a trading course. This is a group of traders coming together to leverage their experience. It takes a community to do the work. TraderLab is really all about traders. It's a community of traders. It's a large community. And the idea of TraderLab, there's a lot of work. Data mining, research, mutual support, psychological elements, a lot going on there. And I think the most important part about it is that you need to be in a professional community where goals are aligned. It doesn't matter, by the way, how you trade. You could, use whatever works for you. But if you don't have an edge, you're just visiting, you're not going to be in the business. I can't guarantee many things. I can guarantee you won't be in the business. That I will guarantee. So, and that's based on 46 years of doing this. So, I've just seen over and over the same things. There's nothing new. And every trader who comes here, not here, but to trading, doesn't really understand what they're doing. They don't understand the environment. They just are going to try to fit trading into your environment, whereas you've got to fit into the trading environment. It's very different. You can't bend this thing to your will and your needs. You need to bend yourself to adjust to this. And that's not easy, because you're pushing back against primal wiring and a lifetime of conditioning. How the world works, order somewhat. Here, no, we don't have it. We have randomness, very different. So that's my main message to you. But I believe anyone who comes to TraderLab can learn how to trade if they do the work. And it's not complicated. I always want to say that because I know, when I talk to people about trading, which I don't do too much because they don't get it, their eyes gloss over, but I kind of give them a simple understanding of it. It's shopping, everybody understands shopping. That they say that's really complicated, like you have to be smart or something to do this. No, it has nothing to do with intelligence at all. It has to do really with learning about yourself. You'll spend more time trying to figure yourself out than you will this. This you can learn. Come to TraderLab. It's all there. The things you don't do, like taking the time to do the work, is really FOMO. The things you don't want to do, you want to push the button, is FOMO. It's all driven by your primal need to gather up stores for the winter. You know what I mean? Like, oh, we've got to have food in the cave here. Let's go get it. Let's go get it. Well, never mind. Oh, and then it's, well, wait a minute. There's a bear or a predator behind the rock. Let me be sure there isn't. So there's this continuing conflict between FOMO and fear, and it flips back and forth on a dime. That's why your brain, when you're trying to trade, you're in a Cuisinart mentally. Does that sound like you? Well, it's all of us. The difference is you got to learn about that. What is this? And how do you deal with it? Okay, we have to watch. This is your obstacle. This is the IB. This is an outside edge. So right here, we want to be very conscious of this and this. And where's the stops? Stops are out in here. And your volume point of control is down here. So this can come under here or just out here. So we'll see what it does and then come back. So this is sort of now as far as initiating goes, this is the last location for me. This is where your teeth chatter. We have another trade in the TraderLab called the IB continuation trade. It's a long from here. Now for me, if I'm long from here, I'm not doing anything here. But it's another structured trade, and you are trying to go there. So let's see if what this one does. This is your obstacle. So the way this would work, and this is not a recommendation, because you can't enter here, I don't put an order out, not my thing. I have to have a trigger. Here's the trigger. Let me show you a trigger. I'm going to show you these. Now, you can learn this in TraderLab, and I'm not here to tell you what to do. It's not my job. I'm just sharing, what I have found that you can replicate and vet. Not to do. Do not do this. Learn. This is a language. Let's think about what do we use our indicators for? They're like Google Translate. They are translating some derivative price. What I'm doing is I'm not using any indicators. I'm using participant behavior. What is this? Let's look at this. This red bubble is delta going to zero, but why doesn't it go down? Icebergs. The buyers are here. The sell stops are coming out. When I break high and I'm above the sellers that were here, that's a trigger. I go up, I hit resistance. And where do I come back? This is my support. It's right here, right there, or there. So you could be buying this. Stop will go under here. And you've got to be scaling here. I mean, it's up to you. So this is a structured trade. Now, would I take it? Well, that's not what's important. It's a structured trade. So if you have statistics for this, and we're always doubtful, if I have this as a target and you know where it came from, right? Let's go back. It's this. Let's go back to the higher time frame. This is what was where we were trading before Thursday's Acapulco cliff dive. This was the higher time frame retail price, the highest volume. We rejected it. And then Friday, we gapped under all of this, took out the weak longs under here, got an inventory grab, which you don't know. Now, this was interesting here. And then you open here, test the highest retail price in this distribution and it's too low, where might we go? There. That's all structured trading. Then when you go down in the shorter fractal or time frame, we're using structured trades to get an alignment going up into the higher time frame, which is that 55. So for me, it's longs until it breaks. IB continuation trade, structured trade. How are we doing in TraderLab, guys? Are you guys on this? How are we doing in YouTube? Mohammed, the 6333 you're asking me about? Well, it's mean reversion. The I'm getting a question about mean reversion. How do I feel confident? Well, first of all, I don't have any confidence. I have curiosity. There's not what you're asking me about. How do I feel confident? I guess the real answer to this is I have a trade plan, and my plan says if this is the retail price and it comes out to a location which is an outside edge, low volume area, and I don't know exactly where it is, but here's what I do know. I know my buyers are here and my buyers are there. If I come down here, are these buyers going to step up? Yes, but I don't know. So do I have confidence? I have confidence in my plan. I don't have confidence in the next trade because it's maybe. I can't. I have confidence in my plan. I know my buyers are here, my buyers are here, my buyers are here, my buyers are here, my buyers are here. I know that. Does it mean that if I put a trade on over here or over here that I won't get stopped out? No. So, but I know that when I come outside, what we're doing is mean reversion. And I always say in TraderLab, this is where traders should start, outside in trading, because this can be identified. Once we know where the high volume is or retail price, then what happens is, now a lot of things can happen. This could be too high and we do the Acapulco cliff dive, or we just rotate because there's stops. Longs are in here, their stops are trailing. If I counter rotate, I'm going to take the stops. And there's stops under here and there's stops under here. I don't know how far out it's going to come. I do know that I had buyers here, buyers here, buyers there. And if I come out and I get a trigger and I come back and test right there against this microstructure, there's a little high volume. Think fractals or Russian dolls. This is like a VPOC in here. That yellow line is just a higher time frame or fractal of what's going on right here. Let me show you. You'll kind of get to see it because it's an auction. So I just trade something called the auction. And all the auction is what's too high, what's too low, and wherever the high volume is, which is there and there. So this is in this here. Chop, chop, chop. Buyers are here, sellers are there. The volume is there in this. Right now, I'm just looking at this. I get a trigger. Now, this is my resistance or retail price in the next higher time frame. If that's too low, this is retail. If I rotate back to it in an uptrend and I can buy it here, and my stop should be like, below this. And then I'm trying to come across. And I can come here because where were the buyers? There. And where did the sellers take over? Here. So what does that create? This now is resistance. Longs. So you have resistance, resistance, support, support, resistance, support. This is resistance, but what's the trend? North. Support, support, clueless. Are you guys with me? And now we have resistance here because you got some liquidity. Stops are under here. So if you get long, and this is the IB continuation trade, you know, you got to get risk neutral. The whole key to this thing, to keep your brain intact and your emotions under control, is to get risk neutral. And that means a minimum 2-lot configuration. I share this in TraderLab. How do you deal with the lunatic under the hood? You know, fight and flight and all that. Well, statistical probabilities, that gives you something tangible versus your emotions. Because if it's not tangible, all you got is the lunatic. And then probabilities. In other words, what's my probability based on my statistics that when I take this trade to get risk neutral and get a scale so I keep my stop out here. So the worst that happens is if I get picked off, I scratch and my broker sends me a gift basket. And if I only come out and get picked off and get another trigger, I can put the trade back on as long as I have range. So that's all part of your trade plan. Right now, this is the outside edge. And there are stops here. So I have to be conscious. I don't want my stop here. If I can help it, I really want it out here. So we'll see how this one does. But that's just the next trade. Doesn't matter. It's just a trade. Is that making some sense? When you say to put sell limits, you mean for entry? No, I don't put resting orders out. I need a trigger, bud. Yeah, I'm seeing you mentioning Nicholas Darvis. Yeah, the Darvis box was a big deal. Everybody got crazy about that one. You know, a book comes out, and now they put Darvis boxes in software packages. Um, you can spend a lot of time chasing things. I call it Trader Groundhog Day. I spent a lot of years with that. You know, get an idea, read something, see something, whatever, and then spend time with it, and then try to make it better because everything works randomly. Darvis box, me, no thanks, but might work for somebody else. The more you complicate this, looking for certainty, the more you obscure it. That's all I can tell you. And now that's just my experience. But I spent years, not a couple, many years. When I started in the business, a lot of this technical stuff, Wells Wilder was new. I shared an office with George Lane. He created stochastics. That was pretty amazing. And back then there was no day trading. It was all trend following. You know, short-term trading was swing trading. I used to trade the large S&Ps before we had the minis, and it was swing trading. So 2 to 3 days. That was like, you know, being fast. So very different business. But working with indicators and then building systems, because we're always trying to fit things, you know, curve fitting and finding this and that. I mean, how many of you work with pitchforks or Fibonacci or Elliott wave? I mean, go on and on and on. All right. And everything works randomly. It's all great. Elliott wave was a lot of fun, especially in hindsight. It worked really well. So I'm just going to say everything works. And if it doesn't have an edge, it doesn't matter. If you don't have an edge, and everybody has random winners, but you may find the things that you're trying to make better are just effective. And they don't have an edge. They do work randomly. You need to know the difference. What can work consistently? Well, if you're in a random environment, then your process must be anchored. Your process must be consistent, not variable. Indicators are variable inputs. They have no clue about the condition of the market. Your indicator does not know that right now, this is kind of where we're trying to go for technical reasons. What would your indicator be telling you? Would it tell you to get short here? I don't know. I don't use them, so I can't tell you. My quote plan and my understanding of market mechanics tells me just to keep getting long. That's all. And this was the last long. It fits in your plan. It's called and it's a structured trade, ID continuation trade. It's in the TraderLab. You can learn it. Not saying, and by the way, the fact you learn it doesn't mean you'll ever have a profitable trade with it unless you vet it and you know when it's qualified. One of the things about TraderLab is that the market changes, of course, all through the day. It can be directional and then it can change into rotational. This is not the same as the bullet train earlier, right? Hasn't it changed? Didn't it go from directional now to rotational? Do you have a plan? Do you treat this trade the same as this? Do you trade them the same way? This is where it is said you get chopped up because the condition of the market has changed. In this condition, in the TraderLab, you would know there's only one way, at least unless you have another way that you've vetted, to trade it, and that's mean reversion. And this is what I always suggest to developing traders. Learn this, you'll learn almost everything. Understand mean reversion. It is the most common behavior. And when you understand mean reversion, you also understand other elements of why the market might go here. And it can also go beyond, but that's neither here nor there. What's our extended target? It's this, 74. For me, I don't care. It doesn't have to go there. It has to go anywhere. But this is where I am going, and it's not a trade recommendation. It's just based on the structure. That's where it is, right there. Now, if we get through this, we can come here. That's the 74, but it doesn't matter. Why are we coming in here? Because it's a low volume zone. What's the other part of it? It's not auctioned. If we have a low volume zone, whether it's 2 points wide or 100 points wide, the behavior of the auction is the same. That's what's important to understand. The market operates as you think of it in time frames. Well, I think a little differently about it. Yeah, it's time frames, but it's fractals. And the market behaves a certain way at times. And if we recognize the condition of the market at times, and we have vetted plan, and we know where our next trade is, called the IB continuation trade, you'd only be taking longs. You would not be taking shorts unless you have an edge as a counter trend trader. Where do you think the better opportunity is today? Long or short? Why don't use footprint and Superdome? I don't know. I don't need to. If someone asks me why I don't do something, is I'm a minimalist. If I can remove it, it helps me. It doesn't, more does not create more. More creates conflict. And I'm not saying for you that's true. It's true for me. I found that, at one point, it was kind of the opposite side of the boat. The more I have, the more, because I was looking to create more certainty. So I was looking at more stuff, more inputs. If you think about how gaming works, it's not a lot of inputs, it's minimal inputs. Blackjack is just played the same way. It's a very simple game. They don't change it. They didn't add more cards or, cut the deck 12 times instead of, they don't do any of that. So it's simple and it has an edge. So for me, it's edge. So less creates more. Because if I have conflict, I've got 4 things and I want all 4 to be in alignment. What happens if 2 are in alignment? One is almost there, but not quite. And the other one doesn't know if it's coming or going. What does that do to you mentally? Just a question. And it's not a debate about what's right or wrong. This is not a right or wrong thing. This is understanding the obstacles, the consistency. And also you can't measure random inputs. Random inputs give random outcomes. If the market's random, then we need anchored inputs to measure in a random environment. Is that logical? So for me, I'm a minimalist. It was very hard for me to rip things out that I accumulated over many years. Don't mind telling you that. By the way, this is what the TraderLab community looks like. You're all welcome to it. There's a lot going on in here. This is a professional environment. It is not romper room. Best loser wins. That's a great one. Annie Duke, very good. Thinking in bets. And the idea of this is the TraderLab's professional. It's not romper room. It's not influencers trying to sell you, click this, do that. The only thing you need. No, it doesn't exist. This is a professional environment, and this is advanced trading methodology. Now, I have to always clarify, advanced doesn't mean complicated. It's actually pretty simple. But what's advanced about it is you actually have to learn to think for yourself and not have your indicators do the thinking, because they don't think. They're just price-based derivatives. This is the library of webinars that I've done, and there's, I don't know how many there are, almost 1,000 maybe by now. Ned, thanks for curating this for us. Watch the primer webinar. It's got about 34,000 views. It is a high-level overview of the process. This is not complicated. If you're a shopper, if you go to the store, you're already a trader. The difference between going shopping and trading is this is happening in short time frames, micro time frames. The store doesn't change prices that often. So it's the same. Price is too high, you don't pay it. If the price is on sale, you throw 3 in the cart. And then it comes back to retail. In our world, what we're doing is we're trying to, in every fractal, we're trying to look for what's too low, what's too high, and what's fair. And if we find unfair, we're going to keep motoring along to try to find where is it too high. That's really what we're doing. There's a document section, by the way. The structured trades I've shared, 60 PDFs, settings of my Bookmap, opening context alignment. Remember I talked about those grid sheets? It kind of gives you the sense of how to set up for the day, and the TraderLab community, and data mining and the rest of it. There's a lot going on in TraderLab. It takes a village, if you will, to do the work. Too much work. Too much. But this is not complicated. The work you do, that's what's going to take you time. Your work. Actually having the discipline to do the work and not looking for plug and play. And if you have plug and play, and if you're looking for the shortcut, that's FOMO. And I always suggest in TraderLab, and there's really good reasons for this, take one structured trade and make it yours. Make it so you could teach it to somebody else. When you can take one trade, and you only need one for proof of concept, if you have one, you will have learned all the pieces that are required to learn 2, 3, 4, 5, 6, 8, 10. But this is not a business of video game. This is a strategic endeavor. This is the last long. And the one before this was, where was it? Out here. I don't know. If you missed the run up in the morning, would you be having a profitable day if you just waited for these trades? If you have the discipline and you have a vetted edge, I think the answer, if you're in TraderLab and if you've done the work, is yes. This different, doable, but if you didn't get any of this, let's look a little further down on the long trades that we've had here. This one is a long. This would run away from you. This is support. Break high. Out here, this is mean reversion. Up here, let's just look. This is a bit more advanced because I don't have my VPOC migration yet, but we know this is support. Let's assume you don't get this one. VPOC migration. This is support. You didn't get this one because you're asleep. You come back over here. It's a long. We have now the VPOC migration. This is now a structured mean reversion trade. So longs, 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 How many of these do you need? I don't know. Longs. All the same. Anyway, that's TraderLab. Now, doesn't mean this will work for you. This is not complicated, but you have to know where your trades are. The idea of trade plan is you come to the market with your trade plan and then you kind of wait. Where's my bus? Oh, it's coming. You know where your trade will show up before it does. And that's really what's required is you are waiting for the trade. You're not making it up. You're not chasing the market. You're going, where is my next trade? Well, if we're in rotations and the VPOC is above us, then we know there's only one trade here, outside in, mean reversion. And I always say this is the first trade that you should learn because it's going to challenge you. It's going to do everything to you. Anything else will do to you, but it's the most common behavior. Most of the time, the market is not running. It pauses and then it rotates. If the trend is up, we only take longs. If the trend is down, we'd be using the same process like we were on Friday and Thursday last week of getting short. Same process. Once you learn it, you can navigate. And then we also have, if the day just goes into two-sided trade and we're going nowhere, you could be trading it from both sides. So you have plenty to do, plenty of opportunity to vet, plenty of opportunity, of course, for risk and reward. And if you understand how this works, you will not be bored. You just have to have the discipline to wait for the trade. I hope that's making some sense. Please give a like if you're visiting in YouTube. Visit the TraderLab. There's a link down there. There's no cost if you're in YouTube. Visit the lab, give a like. And by the way, when you visit the lab, in that document section is 60 PDFs of these structured trades. You can take a look at these. Now, there is no plug and play. These are ideas or concepts that you can reverse engineer. And when you come to TraderLab, you can ask other traders, what are you doing? What would you recommend? You don't have to be, this is a very isolated business. No reason to be isolated. Leverage the collective experience of this community. Our senior trader has over 50 years. I've been doing this 46. I've seen a lot of traders come and go over the years. I know why they don't succeed. And I can help you. I can't solve you. I can help you. And then it's going to be up to you to determine, to recognize the impediments to consistency and sustainability, and then to decide what you're going to do about it. And it isn't, and I'm going to suggest, it isn't about jumping from chat to chat looking for the Holy Grail. If you've been doing that, maybe you should just put your energy elsewhere, because we all have limited time and limited assets. And I would suggest you don't waste either of them, especially if you keep waking up with Trader Groundhog Day. That's, working hard, waking up in the same place. A lot of us think it's just tuning and tweaking. This isn't like your car where you get the old screwdriver out. This is trading. And trading is 100% random 100% of the time. You must anchor your inputs so you can measure it. Please give a like, review Friday's stream, and then this one so you can kind of see how the pieces fit together. Visit the TraderLab community. Use the link in the bottom of YouTube. There's no cost. You do need to verify your Discord username. You'll get a little code. You will not be solicited. You will not be spammed. The TraderLab's a professional community. If you're serious about the business of trading, you should visit the TraderLab on your journey. Thanks for visiting today, guys. Appreciate you coming by, and I look forward to seeing you tomorrow. Trade safe, and remember, you have a choice. Either sit with the gamblers or maybe sit on the house side of the table. Thanks again, guys. Thanks for visiting today.